Okay, here's a real quick video to demonstrate the pre-market high level and the power of it. So on July 19th, we had Meta opening here at right here at 170.37. It had been gapping up just a little bit. I think it closed the day before at 167.20. So actually, a fairly decent gap up. Now, the way I do this is I'm marking the pre-market high. I'm also marking the pre-market low, which was right here, 167.77. I also like to mark the post-market high and low if they are, a greater high or a greater low than the pre-market high. But in this case, they were not. Actually, this was, but I don't have it marked out because basically price just went up and we dealt with the what we were dealing with was an upsurge. So anyway, be that as it may, here's what we have: a pre-market high of 170.78. Actually, yeah, 170.78. Okay, so price opens, pushes up, and pulls back, pushes up and pulls back. Then it puts in this series of buyer's wicks with an ascending triangle just below the level, pops up through it, does a probe, a probing wick. I call it a probe when it's pushes up and then it pulls back right exactly to that level. Now you see that's the first candle of the day that has wicked down exactly to that level. Okay, that's the first one of the day right there. All right. Well, if you look at volume here, volume on this pullback candle was relatively high, and then it got weaker on this pullback candle. That's a really good sign that the selling pressure is lightening. It's also getting ready to push back up again. So then we have the very next candle is probably the one that I would be getting in on. And I would be getting in as this candle completes because I would see everything I needed to see at this point. I see this strong push up, this probe, this pullback to the level, okay, and the push up. Now, other things that are supporting the trade, this line here, this is a 20 period daily EMA. That's typically a very, 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 very powerful base of support. So once we've definitively pushed through it, pulled back and held above it, which is, if you look, that's the first time that's happened today. These pullbacks were below, this pullback was below. This is the first pullback that finished above that 20. So it's above the 20, it's above the pre-market high level, and you've also got 9 EMA, you've got 20 intraday 9, intraday 20, and VWAP. They're all right there supporting this level. So those are all factors that you would look at in order to make that buying decision. You've got support everywhere, and it's just an amazing spot because 1, 2, 3, 4, 5 levels of support on this candle. Okay, and that now the only decision you have to make is where to get in and where to place your stop. So the way I've been doing it is I've been getting in as soon as this candle completes. So that would be right at this level here at 171.10. You got two choices for your stop. Choice number one, under the pre-market high level. Choice number two, a little bit looser stop, a little bit wider stop, a little bit easier to hold, would be under the 20 EMA level. So those are the two major horizontal levels, okay, that we're looking at. When I say horizontal, I mean they're set levels. These levels set on in a different they're on a different parameter than these moving averages. And this is a moving average, but it's a daily moving average, so that's why it's horizontal. It's on a much larger time frame. The 9, the VWAP, and the 20 are more based on today. So anyway, I like setting stops under horizontal levels versus angular levels. I just think they're more solid in a way. So anyway, like I was saying before, the question is where to place your stop. So you can play a tighter stop. You'll need less to get to a 3-hour target, less distance. Or if you keep a wider stop, you're a little bit safer, but you'll need more distance to hit your 3-hour target. So that's a choice that's really up to the individual trader. It's a sliding scale. You know, it's on the one hand, tighter stop means more likelihood of getting stopped out, but you don't have to go as far to get your target. A looser stop means it's much more difficult to get stopped out. Maybe not much more difficult, but it's definitely more difficult to get stopped out. But then on the other hand, you do need to go a little bit higher to reach your target. The beauty of this system is that because the moves are so powerful, that you can use a little bit wider stop, which will keep you in the trade and have you get stopped out less often. So that's just kind of something to keep in the back of my mind when I'm trading. I can keep a little bit looser stop with these types of trades because it's just more of a slingshot effect, more of a rubber band effect with this type of trade. And it's going to go a little bit farther than your typical trade. So the last thing I want to kind of point out is the time pivots. One of the things I've been talking a lot about lately in my videos are time pivots. The time pivots are 9:45, 10 a.m., 10:30, and 11. So let's see what happens at 9:45, 10 o'clock, 10:30, and 11 on this particular trade. Okay, so 9:45, we see that things are moving down pretty sharply. The beginning of the 9:45 candle is right here. The move's already begun. These are not exact at all, but they are zones of movement, in time zones of movement. Okay, so the move actually started down around closer to 9:40, but 9:45, you had a huge candle down. Okay, 10 o'clock, you also had the beginning of a huge move down. Okay, so 9:45 saw a huge move down, 10 o'clock saw a huge move down, and then 10:30 was the 10:30 candle right here is where we start to get that pivot point. So at the real pivot, actual pivot's 10:35. So again, these are not exact. These are time zones, not to the minute, to the second, but they give you an idea of where price turns. So I always like to kind of keep that in mind. Hey, 10:35, that's right within keeping of a pivot time zone. So those are all things to keep in mind when you trade this system. And that's about it for now.